Okay, I'm going to share my screen and let's get going. I think everyone else has load shedding. I see Stu's online. Let me just message him quickly. Okay, yeah. Then let's just get going. I'll start recording now. Share with you guys my screen. There you go. And then, yeah, just use the chat option for today. The marks that you guys are using aren't picking up. Oh, there's Stu. Okay, cool. Yeah, just use the chat to send me questions today. I recorded a whole video earlier with Mark. So I like talking to Mark because he understands trading from a retail perspective. He traded that before, and taking him through it. A lot of concerns, well, not concerns, things that I think questions that everyone wants answered. I've got here, which order blocks should I use? And also people struggling with calculating stop losses I've seen as a big one. This is for the more new traders that are just entering one lot buys and sells with no stop loss and stuff like that. So I'm going to teach them how just go over everything from start to finish again today. Can everyone see this screen clearly? We are on Euro GBP. I'll make it full screen. Yes, cool. We can move on. So Mark was basically breaking down Euro GBP, and I also asked him, so he took a short today, and he took me through his process. Obviously, we're looking at the weekly now. He said we're bullish, which we can see. Market's going up. If we look at market structure, we've been in an upward cycle. This is where price is now. Now, I think it was on the daily. Let me just take magnet off. He saw this here. It's a change of structure. So that is correct, but we've got to remember what I taught you guys. We've got to give ourselves a narrative on the higher time frames. So if we start on the weekly, we know price is going up. We're only looking for longs. So remember that. Number one, what is our narrative? We're looking for longs. This change of character actually isn't, how could I put it in English terms, important to our overall trend. There's lots of changes of characters in here. This one here, break of structure, this change of character here. But in the schemes of things, price is moving up very, very nicely. Let me just take a sip of wine. Make sure my recording's working. Yep, we're working. I see Charles typing. So should we look for liquidity against the trend line? So for targets, for liquidity, if we're heading to the upside, our liquidity would be on the top side that we're looking to take out. So remember I told you wicks are gaps, fair value gaps. So that would be a liquidity spot as well as the high. These are the liquidities we're looking at in the market now. And you see now we've got a fair value gap in here as well. This is on the daily range. Okay, that's the liquidity we're looking at on the upside. So if we're going up, you see how all this liquidity was always taken. As soon as we changed character here, came back into this order block, this was our liquidity sweep. This was our liquidity sweep. This was our liquidity sweep. So then what's our next liquidity sweep on the higher time frame is these liquidity sweeps. But then we've created narrative to then sweep these liquidities first. So these would be our short-term liquidities, and these would be our long-term liquidities. Where did I get this thing again? It was here, hey. Okay, cool. So he said to me, why can't I go short now? Well, first of all, if we look at the market, let's just break it down into a 1 hour now. So he came in here, he saw this change of character here. This was the change of character, and then I think he entered on the 1 minute or something. Yeah, on the 1 minute. Let me just bring up my indicator. Just make it a bit easier. He entered down here, looking for a short. Yes, order block. Short position above the high. But then he made the mistake here, ladies and gentlemen. He looked left. Far left here. So the position's in there. To take out these lows here. That's what he was saying, the lows that are going to get taken. I'm just going to take you over what he analyzed first, and then I'll go over how I would have traded this. So he was saying this should have been my trade, and obviously it went against him. Now in hindsight, looking at this, he wasn't wrong to take this entry, okay? On a 1 minute time frame, if I'm looking here, we always talk about that double entry. We had the change of character. We had the breaker block respected here. Price broke structure. Then this order block, perfect entry there. But you guys have seen how I enter. Where would I target as the next liquidity zone if this is my entry on this candle here? It would be these equal lows here. This would be my take profit. But look at that risk to reward ratio. It's 1.7. Okay, sorry, Charles got a question. Sorry. So then, I mean, order blocks against the trend line. Liquidity is the highs. Remember, liquidity is fair value gaps and weak highs, weak lows, equal highs and equal lows. That's liquidity. So the order block would not be your liquidity zone to target as a take profit. Yeah. So you target above that order block. So going back to this, we can see it's still 1.76. And then I did tell him, I've noticed this in the market, when I have a change of character, a break of structure, and then another break of structure, I wouldn't target these lows because of how this market is played out. It's giving me enough reason that money's going to go down. So remember I told you, we take from the lows where we're targeting and we look for a zone under the 50% where we would take profit, okay? So if we look here, no, sorry, he entered here. He entered off this order block. I was just getting it wrong there. This one here. Short. And targeting these lows here. So what I wanted to say is, remember this saying, CBB. If you get a CBB, then I wouldn't expect it to break these lows, okay? Because we've had a change of character and 2 breaks of structure. This is something that I've noticed in the market. 2 breaks of structure, it starts to slow down. So with this entry here, I would only target these lows. But say if I entered on this first break of structure here, I would take, as usual, 50% off at a 50% level. I'd take 25% off at these lows, and then I'd run it until I see an up close candle close. So I would have closed there. So that's on a CB. But on a CBB, I would target the lows. But remember, Mark was trading against the narrative. That's why we didn't see this push all the way to this low. But at the same time, it worked out. You can see that this way of trading still worked out. An area of concern below the 50% of the fib here would be this fair value gap right in here. That's where I would take my partials as I'm coming into that zone. So I can take this fib off now so it's a little bit clearer. Let me zoom in so it's a little bit easier to see. So right at this zone here, I would have taken out 50%. And as I tell you, I would have then gone stop loss break even, targeting these lows as TP2. But we can see it doesn't come, it's literally 1 pip away. Literally 1 pip. That's 87839. This is 87838. This is trading against the narrative and it still would have worked out. But so that was just me going over his trade, how he could have managed it more. Remember, he was targeting lows way down here and then wondered why price came and reversed on him. But if he still used my strategy of taking 50% at a fair value gap or a liquidity zone, so another low. So there we used a low. It's not really a true low, but that candle's low and this fair value gap as a take profit area. He still would have made half his RR, put stop loss on break even, and he would have been break even. He still would have been paid. But he was holding for lows that weren't in this lower time frame structure. He was looking at time frames from way back. So because he saw this big move, he was like, I have to get short. I have to get short. So he is targeting lows down here. Where in matter of fact, this is where an order block lies. We'll see now if we go back to the higher time frames. So remember the theory that I said, what is the zone that created the change of character or the break of structure, that order block? Let me turn off my indicator quickly so you guys can't cheat by looking first. So higher time frame narrative is we're in an uptrend. We're looking to break these highs, okay? This change of character doesn't matter for the long-term trend. Why? Because there's an order block left below here that is unmitigated, that created a change of character to the upside. I mean, change of character, yes, because we changed the character down here to reach into this order block. Because why? This order block caused this break of structure here and was unmitigated. So this is them grabbing liquidity just before going up. So this is how I can explain to you guys. This is how you find which order block is the right order block. Can you see what I'm showing you here? This order block here caused this break of structure here. Price went up, price came down, didn't mitigate this order block. So on the higher time frames, the daily up to the 4 hour, the only way I would call a mitigation of an order block, you know what that would be? Is at least 50% of that order block being tapped into. So that would be this level here. Sorry, this level here. So that's called a mitigation of an order block. So while that order block is still open, see how it has not mitigated it. It hasn't come into the zone really. You see how it's tapped the wick. This wick here, the top of the wick, didn't cause this move. It's this accumulation of orders here that caused this move. So this break of structure doesn't mean anything to us, because what's the major break of structure here? This first break of structure, we're waiting for mitigation to happen. And I'm pretty sure if we go into an hour time frame on this order block here, and we look at our volumes, we'll see here, top of the 1 point of the point of control here taps into it. The point of control gets tapped by 1 pip, guys. By 1 pip. No, not quite. 32, and it hits 23. So we can see how important it is to make sure that order blocks are first mitigated before we look up for order blocks. We must look down for order blocks first that created higher time frame big moves. Okay? Let's go back to the daily. Let me delete some shit. Brush. Let's turn our attention now to where he said, change of character happened, I must go short. First of all, what's his big mistake? If this is a change of character, where was the last high? Here. This was the low. So this must be a strong high. What order block here caused that move? Why are we shorting in here? Remember, from this high to that low, I mean, this candle hasn't even closed yet. It's a daily candle. We've still got time, but let's just say it closed. We need price to come up above the 50% line so that it's in a area of discount for shorts, for smart money. So then if this was the order block, if the bear market was established on the daily, the higher time frames, this would be your order block you'd be shorting from, not a 1 minute change of character down here. Does that make sense? Remember to use your fib. Where in the last swing cycle are we now? Are we in a discount? Are we above or below the 50% line where smart money, after they've taken shorts, has another reason to get in on a short? They're not going to short when it's expensive. You know, obviously the price has to be low to get in the short, but let's say on a buy, they're not going to buy the market when it's expensive. Are you going to buy eggs and toilet paper when it was a shortage in the supermarket? No. If you want to stock up on something, you buy it when it's cheap. That's why when petrol goes up, everyone queues on a Wednesday night to fill up their tank. But now we buying a market that's broken out because we think it's going up more, or we're selling a market that's done a massive down move because we're scared of missing out that it's going to go lower. Price has to come back. I see Stu's typing. So I don't mean to cause confusion, but would a change of character not be where the red arrow is? No, because the yellow arrow is where there's a low. Remember, what constitutes a low is a higher close candle to the right and to the left. So that is a low. It is a change of character, but in our higher time frame analysis, our narrative we painted, remember, we got to paint a picture for ourselves. Our picture is we're going to break these highs eventually. It's a weak high. You can see that labeled right there. It's a weak high. And we have an unmitigated order block below here. What is the order block that caused, let me just get this away, the change of character to the upside? So this change of character to the downside, you know what this actually is? This is them adding equal lows. You see that? This is for retail traders to go long at. Yeah, retail traders are going long. You know why? They like break, retest, support, whatnot. This is them taking liquidity but mitigating the order block at the same time. You see, they grab liquidity, into a premium area, point of interest, and then look at this go. Boom. Change of character happens here. So we got to think, what was the zone that caused this change of character? Right here. Turn off this indicator for now. So we can see we're actually setting up a bar. This is why I wanted to go over this with you guys as well. I'm analyzing right in front of you guys that we possibly going to have a bar here. We now look at our Fibonacci. Is this a valid zone? Yes. The 79, the golden zone, is actually sitting right after mitigation of this order block. Let's use another tool that we like to use. Let's go on the 4 hour. Let's go with our volume tool now. Where's our point of interest? Our nil point of control? Right there. So what do we want to see price do? We want to see price on the hour. Look how it signals out this order block now, right in here. This is how we refine our order blocks. So now we have an order block in here that needs to be mitigated with the point of control. So you know what I'd do? Just to be safe, let's delete that. Let's just say, in case this is the order block, we don't need to worry about it, but we can see it's not because it didn't cause a change of character. This one did. We're going to set up a long on this point of control, our stop loss outside of the 4 hour order block, the daily order block, sorry. We're going to be ultra conservative. This is going to be our high risk, what I like to call a high risk entry, but with low risk. So what do I mean by that? Over here, I'd only enter in like a 50% of the position that I want, just so that I know I could catch the point of control. But then on the 1 hour, what I'm going to do is, once price taps into this, I'm then going to find what causes that break of structure somewhere. Maybe the market comes like this, and then boom, we get a change of character. Now this is our double entry to then ride it up. Now on this order block somewhere down here, you know what I can do? I can enter a smaller stop loss, because why? We've now got a change of character on a 1 hour. I can now enter there at another half risk position. So now I'm in for one full risk, whatever that is on your account. So for me on the challenge account that I'm doing, this will be a 10% risk. So 5% on this entry, 5% on this entry. But now look at that. That's an 18-to-1 entry opposed to an 8-to-1 entry. But I've guaranteed myself 2 chances of getting into this trade. If I don't find my second entry because the market gets some news and we just shoot off, I've got my low risk entry on the higher time frames on the point of control. So again, how would we work out our profit taking zones? So obviously TP2 is this high because it's a weak high. We go to our entry. We look above the 50%. What is the liquidity that's resting near around the 50%? I can see this fair value gap and these equal highs here. So I would go, that's TP1. If you want to be a little bit cautious as well, you could say that's TP2 there. So here I would take off 50% of the position. And as soon as 50% is hit, I move everything stop loss to break even. Stop loss is at break even. We've taken 50% of our 2 trades. Now, if price comes down to find another order block or the market reverses because of news, paid the trader. Let's say price comes up here, down, down. We don't care where price is now. We at break even. Then price comes up, takes TP3. What am I taking off here? 25% of my initial position. And then I have my final 25% resting up here as my final TP on these highs. Yes, you could hold this. Yes, there's other highs here, but you know what? I think you guys can agree that if we go back, we say pay the trader a 5% risk of your account at 18 to 1. You guys can work that out. Yes, we're taking 50% off here. So let's just say a 9 to 1 overall profit that we make on this whole move. And then this one is a 8 to 1. So let's just say we make 4 to 1. So overall, we've made 8, 4, 12. We've made 12 to 1. We've, with a 10% entry of an account, we've doubled the account plus more. With 2 half risk entries that have double confirmed into each other, that's how I'd look at it. So let's look back at the market a bit more and just show you again how to find the right order blocks. Okay, back to the daily. So we talked about this one getting mitigated yet. This is the liquidity grab into that order block. This was the order block that created that change of character. Indicators. Give it some time. Is everyone still here, by the way? My internet hasn't dropped or anything. All good. Okay. So this caused the change of character. You can see here how this order block here was your order block for this initial move here, taking out these highs, fair trade in there. Yes, we did come back down, but this is during December. December's always dodgy, but it came into this fair value gap and shot up. There was another pair he showed me that he did. What was it? What's USD CAD? No, we've been ranging there. Does anyone have, let's go into questions now. I don't want to just dawdle around and show you the same thing. This is going to be our final lesson. Who has any questions? I'll give you 2 to 5 minutes just to type them out or think about it. Charles, I know you're always good for a question. Stu, I know you're always good for a question, and Brandon, so we got a good audience today. Ooh, Euro USD coming into point of control soon. Set an alert for that bad boy. Can you show me the structure surrounding the candle that makes it an order block? Like what was in the PDF? What makes it like the structure as in drawing it out. Okay, cool. So market's coming down. And then we have a change of character. Right. Here's our change of character. There's a few ways to find order blocks. Okay, I can explain it to you quickly. It is usually the last down candle or up candle that's opposite to the move. So if I go here and I take this off, you see this white candle here. This is the last down close candle before this change of character here. So change character here. This is here. This candle here is your order block. And then remember I drew them out in one of the lessons. They usually look like this. Very close to like the wicks and very full looking candles, or the opposite. They're very skinny looking candles. Why this is because there's a lot of volume in this candle accumulating orders all in here. Like this. This is why it's doing that. The reason why it's like this is because it opened here. There's orders all the way up here, all the way down, and then the last order was placed there. Cool, I get you. And the cleanness is the most important. Correct. 100%. Thank goodness I learned about this so I can delete them all. Boom. Oh yeah, let me carry on with that drawing for you. Where is it? Oh, I deleted it anyway. So, where we found our order blocks. So that's the move, and then we have a change of character to the upside. This is what we'll see. So this is basic market structure. Obviously, it's not as clean as this. You got to remember. But we had our change of character here. And then within this move here, there's moves like this. Okay. Maybe not as clean as that. Let me just rephrase that. Sorry. So price came up like this, came down, and then went there. So we need to find where was the last down close candle, because this is an upwards movement. Where's the last down close candle? Probably in here, and then it's up close, up close, up close. So this would be your order block here. Sorry, I didn't draw it right. So this would be your order block here that you look for consequent encroachment on the higher time frames. Remember, anything 4 hour, 1 hour, we want to see consequent encroachment. So what that means is we need price to go into at least 50% of the order block, or into a point of control where we use the fixed volume range in here. So if the fixed volume range shows us that the point of control is at here, I don't mind you entering here rather than waiting for 50%. Yeah. So that's how you find with a change of character. Now with a break of structure, so market's going up, like I was saying, we're following that weekly stuff, that weekly trade. What was the order block that caused the break of structure? So let's just say prices did this to break that structure. So in here, that's where we found our order block. So you got to look at the higher time frame, break of structures, change of characters, and then what is that zone, that last, look here, that last down close or up close character. Sorry, where am I on this thing? up close candle that caused that so if we look here, this was the last up close. So see, this is where the indicator doesn't work and you need to use your eyes. This was the last up close candle before this change of character here. Yeah, change of character here. This is on the weekly, guys. And then we look to the left. Oh, there's that white one that looks like an order block. So that would be my order block because it looks better. Now we drag that across. Look how the weekly level, that created a change of character, and it was an unmitigated zone until 4 weeks ago. So people would think in here, this is a change of character. This is a change of character. No, now it's a change of character. No, what was the change of character, the major change of character before? This one. What was the candle that caused that? This one. Look how quickly price came in here and wicked down. How many wicks do you see happening like that in this market? Not many. There's one here. Yes. Came into an order block here. But this is the order block that it's going to respect every time. And see how it comes just past 50% and how quickly it comes down. Now we expect the next week to take out these lows for sure. This week and next week. You're only looking for shorts on Euro USD for sure. So that might change our analysis here on the 1 hour. Yeah. See how we needed to break these lows. So this order block is invalidated. We're not going to look for that long here. We're going to take our alert and delete it. So what could we look for then on Euro USD? I want to see this low get broken, and then I'm going to look what candle here caused that break or to retrace, and then here I'm going to go short again. Cool, I get you, and the cleanness is the most important. Yes, it's almost DOM without that. DOM without that info. Yes, 100%. It's DOM without looking at the higher time frames. Where are we? That's why I talk about we need to look at a top-down approach. So from the highest time frame, a weekly, I would go to the highest time frame. Then go into daily, 4 hour, 1 hour. And you know the rules, guys. You divide by 30, gives you the time frame that you should be looking at for that change of character, and then the double entry model to then get you on that highest momentum ride. I meant the order block is essential depth of market. Oh, I'm not too sure with the phrase depth of market. Can we quickly run through the rule of 30 again? Sure, bro. I thought you were just saying DOM. It sounded cool to say. Anyway. So rule of 30, Stu, is we work our way down from the weekly to the daily and we find our areas. Okay. So let's just use this weekly level here as an example. I'm not too sure if I'm going to get the data from 2 weeks ago like this, but we'll try. Okay, so it's a weekly zone in here. So we're saying, okay, this is the weekly order block. Yo, I'm going to have to do some math here. I've never entered off the weekly, if I'm honest. But weekly is 24 hours in a day, times 7 days a week, times 30 days, divided by 30, 168 hours. So divide that by 24, 7 hour. So you'd enter on the 8 hour. No, I think I've got that math wrong. Let's just say it's the 4 hour, okay? So once prices come in here, we've got an unmitigated order block here right now. So remember, with the double entry, we get it into our higher time frame. We've got our change of character here, and we've got a leftover unmitigated order block here. So I want to see price come into here, and then this is going to be my entry to write it down on a weekly time frame. So on the week, we're going to break down that low. So then let's go back to the 4 hour. This would be my short here. This is going to be a crazy trade. 20 to 1. But you're going to have to hold this for months. But that's essentially the 30-minute again. Let's just go analyze on the 4 hour on another pair, maybe. Just pick a random one. So we look at this break of structure. This was our order block. And then we carried on to the downside. We had a break of structure here. Sorry, this is a change of character caused by this. No, change of character was there. Break of structure. So we've headed bullish. We've gotten a nice look at a short there. But then we've got our order block here. So now let's just say price was, where's my replay tool? Price was here, and we know we've got an unmitigated order block here. This order block caused the break of structure. So we want to see price come into here. We then take 4 hours. Here's my calculator. Take 4 hours, we convert it into minutes. So we times it by 60, and then we divide that by 30. So that means on the 8-minute chart, we round up, remember? So 8 minute would be 10 minutes. On the 10-minute chart now, we're going to watch price come into this zone. We're going to have our volumetric up here to find our point of control in there. And now we watch price come. Price come. Let me just play it. Now we've set our alert up in here. We're not jumping in early. Boom. Look at that. Point of control tapped. Now we're seeing price come down. What are we seeing? Bring up the indicator to help you see it better. Change of character. Order block. Short position. Above that high. Look where price is. Could have aimed for those lows, but in matter of fact, we would be aiming for those lows for sure. You can see our price came in. Where's my point of control now? So price tapped point of control on a higher time frame. We got the change of character. We had our order block, which caused that change of character. Price comes back into it. Bob's your uncle. That's the double entry using the 30 rule. Do you understand that now, Stu? And let me go over it again. Where's our take profits? Entries here. We're looking for these lows. What's a point of interest below the 50? Hey, man, look here. What kind? There's a fair value gap. So, TP1 smashed. Now, break even. Now we go meet uncle and auntie for tea, and we open up our computer tomorrow. TP2 either smashed or break even. And you know what? We paid. We are paid. Got it. So whatever type of trader you are, swing, day, or scalp, once you do analysis on the higher time frame, you use the rule of 30 to enter your trade. In saying that, it doesn't hurt checking other lower time frames for further confirmations. It doesn't hurt, but you know what it does, Stu? It gives you an overload of information. You're entering on the 10 minutes here. This whole trade could have been taken today. Your entry would have been, let me take this to South African time. Your entry, you would have got ticked in on your entry at 5:20. It's now 8:30. Your TP1 would have been taken. And remember, we analyzed on the 4 hour. Analyzed on the 4 hour. You could even hold this to this low. So this could have been a massive trade. Let me just go back to the 10 minutes. You take your 50% and you let this thing run the lows because we're in such a good market for that. So let's rework out this entry here. We target these lows, obviously. We maybe take 25% off here, and then we let 25% go for these lows here. Because overall market on the 4 hour is bearish. Shot this overview did justice. Pleasure, Brandon. I got you, bro. Got you, my boy. Makes perfect sense. Lovely. Quick ones in terms of coming back to a chart we've already analyzed. After we've already taken a profit, etc., can we resume our previous analysis and just add to it? 100%. So what I would say is, say we take out these lows and price comes back and there's another order block here. That's your time for re-entry, guys. That's when you enter at a half risk. Remember, from the top of the market, you would enter, say, your 10% risk here. But then price comes here, takes out this low, then we find an order block somewhere in here, and we know, okay, it's unmitigated. Price is going to come off this order block. In this area here, we can take a 0.5%, so 5% risk here to add to our position with a small stop loss. And we ride it to take out these lows now. So that's how you would then add to your position. And you know how you add to your position is you would zoom in on this area here now with this order block. And now what would you use again? The rule of 30. So now we're on a 10-minute order block. Okay. We know there's a 10-minute order block or a 15-minute order block that we want to see mitigated. That has been unmitigated. We now do the rule of 30 and we go calculator. Obviously 10 minutes times 60 seconds divided by 30 is a 20-second chart. So I would enter on the 1 minute on an order block when we come back up. You know, order block, change of character, double entry with the break of structure coming back. Remember. So that's how you would enter in again to stack your entries. So that's why swing trading on a weekly analysis is cool, because I don't really trade on the weekly, but let's just say daily. So on my daily trades that I put on my long swing trades, it's cool because then on a daily I can go into the 2 hour and re-enter on a 2 hour a couple days later. And then a couple days later, I'll be on the 15-minute re-entering again and stack 3 trades in a row that are now on break even, and I'm riding them all the way down. And that's the best feeling. You got 3 trades on, you've taken your profits out, and you're just riding the train, knowing that this is a strong high now, and this is a weak low, because our higher time frame tells us this: if you don't dollar the high, you're gonna dollar the low. Indeed, then it's just a game of patience thereafter. 100%, Brandon. Okay, guys, it's nearly been an hour. Get your last questions in. This is the last coverage of Tier 1. I hope everyone going over it again. I know when you learn it for the first time, it's a bit hard because there's so much to digest. But then this is your time to ask questions so I can clarify things for you. This is like the last cram before the test. You know what I mean? That's when you start actually conceptualizing the concepts. Especially when I was in varsity. When I went to the lessons, I had no fucking clue afterwards. You know, smoking a jiggy in the parking lot or something beforehand, and then you get home and you need to study it yourself. That's when you get a grasp, a concept on it. But then you go to that smart guy in class and he takes you through it. That's when you actually understand it. So that's what this lesson is. Let me help you understand it. So I'll give you 5 more minutes to send in your questions, and then we'll call it for Tier 1, guys. It's been a great first group that I've ever taught trading to. I must say the feedback has been awesome. Thank you so much, guys. Really do appreciate it. And I hope I get better for you to help you guys learn better and better. Tier 2s are going to be another trip to the classroom on half a jiggy, where it's going to be a lot of information to take in, but that's why I want you to understand Tier 1 before moving on to Tier 2. Stu, I'm all good, man. Rule of 30 explains so nicely, and I'm keen to add to my strategies. Shot for an epic Tier 1. Pleasure, my brother. I also suggest maybe this weekend, guys, if you got a Sunday off, go through all the lessons again. They're not long, they're an hour long. You can binge watch what series are out right now. MILF Manor, another time. I don't know if you guys have seen that show, but it's a lach. You can binge watch MILF Manor another time. It's time to make money. Charles, I'm all good for that. Is there going to be a way for us to review our Tier 1 videos going forward? Feel like I'm going to have to revert back to them often. 100%, Charles. So from now on, you guys have Tier 1 unlocked. So whatever's in here is going to stay in here. But then a nice thing is, you know, while I'm learning how to teach, I'm going to get more and more concise with it. Learning from how you guys see the markets and stuff. So this next Tier 1, obviously you can join the chat room if you want, the classes. Tier 1's going to be Monday and Wednesday nights still. But remember, I'm going to record every episode, so every episode will then be posted again. So if you want to catch up on episode 1 and see how I'm teaching it round 2, you can catch up on that. And you'll have all the resources in there still. You'll just get Tier 2 unlocked now. And obviously, it's going to be all new different stuff in Tier 2. Better we don't chat on those, but thanks. That's great. No, bro, you can chat on those. 100%. As I said, you got lifetime access to this. And if you're struggling with stuff in Tier 1 and you come into a lesson and you've got questions and stuff, 100% ask them. If you've got chart analyses up, that you want to post and get a feel for, post them in Tier 1. So in Tier 1, it's going to be more focused on the swing trade style trading. And then you'll see in Tier 2, I'm going to focus more on market open and a few more technical things that will open your guys' eyes up to smart money. But for now, this is all you need to make money. Tier 1 is all you need to make money. Trust me. Oh, wow. Didn't realize that. Thanks, bro. Pleasure, brother. Just wait for Brandon's message. I'm Gucci. Tonight was the finishing touches I needed. Perfect. Love to hear it. Love to hear it, guys. Again, thank you guys so much for being a part of Tier 1. I actually really enjoyed it. I must say, I really enjoyed teaching. It helps me refine what I know as well. Because I'm sure when you started trading, you've got all this in your mind. But when you actually start teaching someone, it helps you understand it even better. So for me, it's actually helped me become a better trader and a more disciplined trader as well, because I've got all you on my shoulders. Well, not really on my shoulders, but you know what I mean. I've got a responsibility now to teach the right things and show the right trades to you as well. And if you guys would like to help me out in any way, please recommend me to any friends that you know that like trading. We are going to start tier two for you guys. So tier 1 will be again Monday and Wednesdays. Tier 2 will be Tuesday nights. So we don't have as many lessons to go through, but they will still be information packed. So Tuesday nights is new tier 2 lessons. And then tier 3, when we pass tier 2, that's when we go into teaching you guys how to get funded with these funded companies. And I'll take you through how to use the strategies and stuff. You will have the strategies down by then, but we'll actually go through funded challenges together with little fun competitions. And I will give away funded accounts to you guys as well. You know, I'm doing that $50 to $100,000 funded account challenge. So I think at the end of tier 2, I'll do a challenge or quizzes or something like that. And the winner of tier 2 will get a funded account. And then in tier 3, on Thursday nights, we'll just do a weekly recap and going through funded accounts and how we can keep those accounts going and earning you guys a good 10% a month. That's the goal. Don't aim for 50%, 100%. If you have $100,000 account, this is how I started, and you make 10% on that, you split it 80-20 with the company, you're still making 100,000 Rand a month trading. Tell me you can't make a living doing that. And obviously you upgrade your accounts as you go. When you do 10% a month for 3 months with these funded accounts, they double your account to 200,000, and you can go all the way up to 2 million. So that's what tier 3 is for, funded accounts and scaling up to large capital. Charles, please check out FX2 Funding. Their services look great. I'll have a look at them, bro. I've got my favorites right now that I trade with. So I'll definitely put you guys on where I trade. There's some rules that I have to look at. But yeah, guys, just back on the referrals. If you can refer any friends, I'll give you the indicator for free, obviously, like Charles did. Thank you, Charles. He referred me to Kevin, and Kevin actually brought in one of his mates as well. And for anyone that you guys get on referral, tell them that you've got a special discount as well. If they come through you, I'll give them 50% off. So it's basically, I upgraded the price now to $500. So it's basically 5K in rands. And they can join. And obviously you guys have learned a lot. So if you can bring your friends along the journey, it's a win-win situation. I'll give you the indicator for free that I use and I've been developing. Obviously I get a student, and you know, you have a friend for your trading journey to chat with and, you know, learn with as well. But anyway, guys, that's been the end of tier 1. Thank you so much again. It's been such a great start to the year. I'm so keen for the rest of the year. And you guys have been solid at learning. any questions you have, you've either got my number because you know me personally, or you can shoot it to me on my email or on Discord. And yeah, I'm going to do a free webinar probably this week again as well, just to get some more signups. If you want to join, please, by all means, join that. And then also from next month, I want to start implementing every Sunday doing a market breakdown here in this Discord. It will be free for everyone. And it'll just be like an hour stream where I'm going to go over the markets and look at some certain zones, set some alerts out, and then screenshot what I'm looking for the next week for the swing trades. Obviously, with the market open trades, it's different. And that's going to be a lot of hard work for you guys in tier 2. So I hope you're ready. Anyway, guys, have a great night. I'm going to pour myself a glass of wine right now and celebrate a successful tier 1. Thank you, guys. Thank you, Brandon, bro. Thank you so much. You soak Cape Town with your wine. Well, you say I'd Cape Town, but actually finished a Black Label Court before I went on to wine. So that's not so Cape Town. And I'm going to the E Grand Prix this weekend, which is going to be a massive day. Haha, good boy. The Browns left their mark on you. Yes, they did. Love you guys. Cheers. Love you so much. I'm going to end now. Peace.